y Mas. Welcome to Dinero y Mas. Raul Mas here with our first guest, a gentleman by the name of Ken Roberts. I've known Ken for a long period of time. Ken is the founder of a company called World City, and he is absolutely an expert on the subject of trade data, trade flows. Ken, welcome to the program.
Glad to be here.
Am I missing anything about your bio?
That's a good start.
All right. So Ken, I wanted to talk to you because there's been a lot of, I guess, confusion, anxiety out there. You recall President Trump back in April declared Liberation Day, really sort of turned the world upside down with talk of 150% tariffs for you. It was kind of reminding me of that scene in Seinfeld, remember, where the soup Nazi, right? No Nazi, no soup for you, soup for you. But it was this whole thing about, okay, I'm going to charge 150% here, 50% over there. And it was chaotic, right? It just sent the financial markets into a tailspin and everybody panicked and the whole, the sky was falling basically, right? Back in April. And what we've seen over the last couple of months is Trump now going in with individual countries, with regions, and negotiating. I mean, this is like the negotiating tactic of, I'm going to scare you to death, and then when we sit down at the table, we'll actually have a civilized conversation and try and reach some sort of agreement to get things back on track for the U.S. Seems to me that's what's going on, right?
The art of the deal.
The art of the deal, exactly. But you've taken a look at the numbers, and I guess my big question to you is, what happened to all that enormous inflation that we thought was going to occur, and that, we had a lot of, scare there for a while, everybody thinking that they were going to go to the supermarkets and prices were going to be suddenly up 25, 50%. We haven't really seen that. So my question is, what's going on and why?
Okay. Why don't we take a step back?
Okay.
And we'll look at some slides.
All right.
And we'll talk about what has changed. And we'll go all the way back to the first term as sort of the starting point, 2018, when the sort of first trade forward just with China at that point started.
Okay.
And we'll proceed through the Biden years and to where we are now.
Excellent.
With a couple of quick slides. So the first slide I'd like you to show is the one that talks about China trade. So China was the first target for Trump, right?
Correct.
And because at that time, the trade deficit with China that we had with China was 5 times larger than any other country. 5 times.
Okay.
So remember that percentage. We'll get back to that.
5 times.
We'll get back to that.
Exactly. We have that graph up on.
So here it is. So China's trade has seen now the steepest decline in 2 decades.
Wow.
Since 2018. Okay. Steepest decline. This year, it will likely finish with less than 10% of all U.S. trade. It'll be the 3rd ranked trade partner. It had been number 1.
So less than 10%, and where was it?
I think it was in the range of 16, 17%.
Okay. So,
Somewhere in that range. It's a steep
dramatic
drop. Yeah.
Reduction.
Yeah. So and now Mexico's number 1, Canada's number 2. Now, for many, many years, Canada was number 1.
Right.
Until China took over, and then China dropped off and Mexico came into place. So for the first time this year, in as long as I can remember, there was a month when China was not even the number 1 importer in the United States of cell phones.
Wow.
India was, because Apple, as you may recall or know,
Correct.
moved its phones, a lot of its manufacturing to India.
Right.
So that's one of the big
In
changes.
anticipation of these dramatic tariffs on China.
So the idea, again, is to lower that huge U.S. trade deficit because in 2018, the deficit had been about $900 billion with the world.
Correct.
Okay. Since then, there have been 4 consecutive years where it's topped $1 trillion. The deficit has not stopped. Why not? Because a lot of that trade has shifted to other countries. A lot of those imports have shifted to other countries.
Okay.
A lot of countries have had big trade deficits. So we'll pop up the second chart, which is the surplus deficit chart. Hope we can get that one up now. And what we've seen is that the balance of U.S. trade, which used to be, this one changes very little over time.
The second chart.
It's a circular one. Yeah.
Take a look at the second chart.
Yeah. And I can talk, there it is. So the balance of trade is related to the deficit, but it's not the same thing as the deficit. It's the ratio between exports and imports. Over the last 20 to 30 years, it's ranged from about, usually in the range of 39 to 41%.
Okay.
If it moves a percentage, it's a big deal. It's now down to 37%. So instead of going, the idea to bring manufacturing back to the U.S. or at least nearshore it, that percentage has actually gone the wrong way and the deficit has gone up.
Okay.
So why is that? What's going on?
What's going on there? I mean, the whole idea behind this is to tackle that enormous trade deficit.
Correct.
And change that trade imbalance. That's the whole reason for these tariffs, right?
Right. And so what has happened?
Bring manufacturing back.
That's right. And so Mexico has then supplanted. This will be the third chart. Mexico has supplanted China now as the number one trade partner. But not only that, it's the number one import partner. More imports from Mexico than China.
Okay.
Think about that for a second. And now it's on the verge of having more U.S. having more exports to Mexico than with any other nation. What I call the trifecta. Be a first time in a long time.
That's the third chart there?
That's the fourth chart, and that leads to that one. That's fine. We'll talk about gold because that's a good chart to look at. I skipped over it myself. That's my fault. So this chart. So why is the deficit?
Third chart.
That's third chart. Why is the deficit going up? One of the reasons is this chart here. That's gold for the month of July for the last 12, 13 years. You see the big spike at the bottom.
Right.
Why are gold imports going up so much? Gold goes up when people are nervous,
Right.
when there's uncertainty. And what we can say about the way President Trump likes to operate, he likes to operate with a degree of uncertainty. He likes
No question
that.
about it.
That's the way he likes. He likes people on their back feet. He likes people on their heels, right?
He does.
That's his negotiating style.
It's like a wrestling match.
Yes.
Right. I mean,
so suddenly you see this flood of gold coming in the United States, like record levels. The other thing,
and the gold prices reflect that.
and
we
then the
started
gold
off
price
the year.
at the same time, the gold price is going up.
Correct.
So it's a double.
Quantity and the price. If you
So it's both. It's both.
So it's both. And so we started off the year at roughly $26.60 dollar price per ounce of gold, and as of today, we are at $3,900 per ounce of gold. That's a 46%
And I think
pricing.
both of us would say unimaginable.
Yeah,
A year ago,
crazy. I mean,
unimaginable.
you would think the world is coming to an
You would think the world's coming to an end, and it doesn't appear to be.
doesn't appear to
It doesn't appear to be.
We got, we're still here.
But part of what's going on with this is importers are trying to dodge tariffs a little bit. When they go in place, they back off. When there's a break, they push it in again. So you're getting these big swings in the flows, right?
Talking about
Initially, gold was going to be tariffed at 30. Remember when Trump said 39% tariffs on Switzerland?
yes,
That was about gold.
that was about gold.
So suddenly he said, oh, but not gold. And this gold started coming in again,
Oh, okay.
right? So, and
Let me ask about Mexico.
yes,
You say Mexico has now supplanted the role of China or taken the lead.
yeah, and you can pop up there it is, the fourth chart
Right.
there.
But my question is China coming in through the back door via Mexico? Because if you go to Mexico, there are a lot of assembly plants there for foreign manufacturers, and China now is playing a huge role in Latin America in general, right? I mean, 20, 25 years ago, China was nowhere to be found in Latin America. Now they're all over the place.
Correct.
So, and they're smart, right? I mean, they've chattel trade through Vietnam. They've looked at other ways to get their stuff into the U.S. Same way that Russia plays around, and gets their oil to the markets, even though they supposedly have sanctions. Is
Same way water gets into your house when there's a leak in your roof. Water will find that.
Finally, it'll find a way to get into your house. So my question is China doing that? Is China sort of going through other channels to continue to supply the U.S.?
So I should back up by say a lot of these charts that you're seeing come from my Forbes column.
Right.
I write a column 5 times a month. I'm supposed to write 5 times a month for Forbes. Have since the beginning of Trump's first term.
Yeah.
Forbes contacted me at that point and said, this guy's talking a lot about trade. We should have somebody who can write for our website about trade. And I've been doing 5 columns now for 9 years.
Excellent.
A month, 5 a month. So it's been a great ride. So that's really the coming. So I tell you that because I did a column a year or two, well, it's probably been a few years ago. And I said, let's look at the top 10 imports, United States imports from China before Trump. And let's look now. This was a few years ago. And what has happened to them? Why have imports from China gone down so much? And what I found is that it wasn't so much a nearshoring phenomenon, which is what a lot of people thought was going on, but we saw a lot going to Vietnam, which you mentioned. Japan, some of it. Taiwan was some of it. Cambodia was a little bit. India. I mean, a lot of countries were getting some of those things. So to your questions, are those really Chinese things just skirting?
Right.
So one of the things that pretty much everybody believes is there is some playing around with the rules of origin. And it's a complicated area, but Trump has now said he wants to put 40% tariffs on anything that is caught violating that rules of origin.
Right.
So the question will be, if China ships a whole lot of a thing to Vietnam, and it's essentially put together, but in Vietnam they do something to change that thing, what is substantial enough to qualify for Made in Vietnam, and what is just plain games?
Well,
I think a lot of people think there's just a lot of games being played.
And it reminds me of what we do with Mexico, right? Because we manufacture U.S. automobiles in Mexico, but then add a component to it here in the U.S. so that we can call it U.S. made or whatever.
Right.
And it really sort of skirts the fact that the bulk of the vehicle actually comes from Mexico.
And there's a lot of regulations on that, and so Trump wants to do that with this as well. And I think it'll be very complicated, but that's the concept. So because of what's happened in China with those imports, where they spread out, regardless of where they spread out, suddenly Mexico becomes more important, right? So Mexico moves to number one trade partner overall because of imports and exports. At that point, we're not number one in either, but the combined Mexico's trade, which is very different, Mexico's U.S. trade is very different than China's trade with the U.S. Mexico's trade with the U.S. is relatively balanced. It's about 60-40 imports into the U.S., 40% exports to Mexico. China is better than it was, but at one point it was 90-10. It's now about 75-25 probably, maybe even 70-30, but still out of balance, right?
Let me ask you real quick, what's going on with agricultural products? Because the U.S. historically has been a very large exporter, particularly of soybeans, to China, right? And pork and a bunch of other things, right? They own Smithfield Farms here, Chinese-owned Smithfield, I believe, the pork processor.
Correct.
What's going on with that? Because my understanding is that the Chinese are now buying a heck of a lot more soybeans from Brazil. And
the last column I just wrote is about that very factor. So the U.S. soybean exporting season is roughly October through January. There's some in September, there's some in February, but those 4 months are critical. So in the months of June and July, before the season, U.S. exports of soybeans to China went to zero.
wow,
Zero. It's the first time that I could see that's happened in, it was quite a while. Been quite a while.
I would imagine that would upset American farmers.
That's American farmers, but it's a slow season. It could be worse. But what's mostly concerning is that apparently by this point, China has orders in for soybeans in September and October and November and December.
And they're not being reflected.
There are no orders.
There are no
Zero orders. And one source I found said that Brazil has now taken care of 85 to 95% of China's needs for the first part of the season.
Yes, now, you mentioned that.
This is a negotiating tactic, clearly.
It's funny you mentioned that. There was an article the other day that came out that a reporter apparently snapped a photograph from Scott Bessent's cell phone. And it was the Secretary of Agriculture writing him and complaining about the fact that soybean exports, sales to China had been frozen, basically, had stopped, right?
Yep.
And somebody was suggesting maybe Scott Bessent ought to get himself a little, screen for his cell phone, right?
Like the football coaches do.
That and the gag, because, this is not information that you want to be sharing with the world right
Correct.
now, right? So,
Correct.
But yeah, I mean.
But this is a negotiating tactic. Remember back to April 2nd where you started the conversations, tariffs against everybody. And then the China thing sort of briefly got out of control, right? Where it was tit for tat, right? And it got up to 145% on U.S. imports from China and 125% on U.S. exports to China. Well, they backed off of that and said, let's rest. Let's take 90 days to figure this out. I think they're now in their second or third 90-day wait, I guess second. Mid-November, that ends. So the question is what's going to happen, and what China is doing, what Xi Jinping is doing, I think, I'm not in close contact with him, obviously. What I think he's doing is saying, I'm holding the soybeans over your head. I'm holding those over your head. I'm going to crush your, soybeans get crushed. I'm going to crush your soybean farmers again. And last time we did it, I think the bailout was 32 billion, I'm sorry.
Yeah, that's kind of ironic.
And the same thing with oil, the same thing with passenger cars. Those are way down.
As I recall, when he was a young man, he actually spent some time, I think, in the Midwest.
I think you're right.
As a young student.
I think he did.
He lived with an American family for a while.
Yeah.
And got a sense of what
knows those American psyche a little bit, right? Yeah.
And I think he understands how important American farmers are to the MAGA base, if you will, right?
Right, right.
So it wouldn't surprise me if that absolutely is a strategy, even though you have not had and he pulled it off with the,
That's right.
with the Chinese.
He doesn't consult with me. He goes, nor does the president, for that matter. Nobody. I mean, you consult with me a little bit, so I appreciate that. But
So tell me, at the end of the day, so all of these dramatic conversations about 150, 500%, the big fear was that we would see it reflected, very quickly in terms of when you walk into Walmart, suddenly all your, food items are up 100%, right? Or the apparel is up 50% or whatever. You haven't really seen that.
right.
But so what's actually going on here? I mean, what you mentioned, I think before the lights came on here, there's a huge carve out, right, for a lot of these products and stuff. So they're being addressed in a different manner, but they're not really those huge increases. But still, is there going to be some sort of seepage? Are we going to see inflationary pressures from some of these price increases going into 2026?
So there are a couple of I'll give you a few quick statistics that are kind of useful. So apparently imports make up about 15% of GDP. It's not a really big piece, but there's not insubstantial. The second one is that historically, until very recently, the overall tariff rate was about 2.5%. So if you looked at the total trade and you took 2.5% of that, that's what the volume of tariff revenue was coming in. And that was true until March. Now, April 2nd, as we've talked about a couple of times, that's when you first started seeing a little creep. Well, just in June or July, it crossed 10% for the first time that I can see going back as far as I can go.
The tariffs, the average tariff.
It's not the average, so I got to make sure I explain this correctly. This is the percentage of tariff revenue as a percentage of the total trade.
Okay.
Tariff revenue is a percentage of total trade. Okay. And historically, it's been about 2.5%. It's up to about 10%. So it's quadrupled.
So that's the impact of the increase in tariffs.
Yeah. Now, if you think about it, why is it only 10% if President Trump is announcing tariffs of 25% and 35%, not 50%? And that's because of these carve-outs. That's because of USMCA compliant. Remember, he went for 25% on Mexico and 35% on Canada at one point. And people panicked a little bit. He said, well, except for anything related to energy, we get about 60% of our imported oil comes from Canada. Energy's out, and anything that's USMCA compliant is out. Now, what's interesting about that is before this all started, importers in the U.S. had a decision to make. Do we want to fill out the paperwork to prove that we're USMCA compliant and enter tariff-free, or do we want to just pay 2.5%? And a lot were paying 2.5%. It's not worth the paperwork. So I'm waiting to see if that starts changing as they say, well, now if it's 25%, I'm going to fill out that paperwork. Okay. So that trade will go into that USMCA compliant. But for now, he said anything that's USMCA compliant is not tariffed. And let me see if I can find it quickly. I have a chart that I think the overall tariff rate on Mexico now is, so this is the percentage of U.S. imports from Mexico that are subject to a tariff, not what the whole number is. It's about 14.5%.
So really not that much.
It's not that much, but it is up. And with Canada, it's about 13.61.
That's about 13% of the total trade with the U.S.
So,
tariffs.
So yeah, so in the case of, for example, so in case of Mexico, I'm going to read the statistics. Just about 45 billion in trade through July of this year was subjected to a tariff out of a total of 310 billion. Okay.
But we're also seeing,
China's at 72%, 73%. So almost everything coming in from China
is feeling
is getting a tariff of some sort. Okay. So,
but if you go to Amazon, you still see all that cheap shit for sale.
Yeah.
Pardon my French.
Yeah.
You still see all that stuff very inexpensive, right? All this junk that we get from
that stuff came flying in ahead of the tariffs as best they could. Okay. Now, somebody's being subjected, obviously, because it's showing up here, right?
You think the importers are basically swallowing that? I mean, are the margins there for?
So the question is, we say, who pays for tariffs? Well, at some point, if government's getting money, somebody's paying for it, right?
Right.
And we know that the government's bringing about more or less about $30 billion a month, let's say, in tariff revenue. Somebody's paying that. So is it the consumer to some extent? Is it the the logistics company, and is it the shipping line, the freight forwarder, the custom broker? Is it the manufacturer? I think the manufacturer's trying to eat it when they can, and I think everybody's trying to eat it before it gets to the consumer because nobody wants inflation.
Right.
In fact, so for 6 years I served. The Federal Reserve has a Trade and Transportation Advisory Board, and for 6 years I served on that panel. This is back in the Obama years, and the big problem back then, we'll laugh now at this. Big problem back then was, how do we get inflation above 2%? It was the struggle. It was the struggle. Employment rate was very low. Inflation was very low. How do we bump that up? Well, along came COVID. A lot of money was put into the economy, and suddenly, if you want inflation, we now know how to do it. Throw a lot of money at the economy, give people a lot of money to spend. Now the hard part is, how do you stop it, right? And that's what we're struggling with. So right now, I think in your last segment, you talked about, economists all we're convinced we're going to see runaway inflation, and where is it? And I was just listening to a podcast this morning where what they talked about, it's called The Trade Guys, a very good podcast. And they're saying, why are we wrong on this? Why did we miss this? And I think it is back to what I was talking about, those carve-outs. So for example, just last week, big tariff on pharmaceuticals and big tariff on heavy-duty commercial trucks, okay? Why pharmaceuticals? One of our biggest trade imbalances and one of our biggest deficits is with Ireland. A lot of pharmaceuticals come from there. And a lot of what's going on, the big surge right now there, I believe, is related to Ozempic-type drugs, that class of drugs. Because now, instead of just giving people with diabetes,
very, very popular.
everybody wants to lose weight, is using them. So far, people are acting like it's safe and so forth. So big surge there. That plays out in a final slide. I can show you at a point about the top ports around the country. But so that's what that was about. But guess what? There is no executive order yet on the trucks. 85% roughly come from Mexico. Are they going to be USA compliant, allowed to enter tariff free, or are they going to pay this big tariff? There's no executive order. There's no indication of whether they'll be USMCA compliant. So again, that's why I don't know if inflation will come. But I can tell you one reason that so many people are wrong is that it isn't, the full tariffs are not in place yet.
Okay. So it's more smoke than fire at this point.
That's right.
But
there's smoke.
Right. But there's smoke. And what you alluded to, the U.S. government's bringing in $30 billion a month from tariffs. Okay.
Yep.
Before, it wasn't bringing in anywhere near that amount of money.
Correct.
Right. So obviously somebody's paying for that.
Somebody's paying.
And the question that remains.
I mean, we know who pays it when it gets paid,
right?
But the question is, where is it really getting paid?
Exactly. Yep. And the question is, will that eventually have to be paid by the U.S. consumer, right, at some point?
If it's the companies there, I mean, there've been a number of large companies that have in the last 3 to 6 months said, we're taking this amount of a hit. Large car companies have said that. A number of other companies said, Walmart said, we're going to eat it for now.
Right.
And so forth. At some point, then their stock performance may slip. So they may get pressure from the other side.
Right. We'll see. Listen, that's the uncertainty. But, at least we're getting a better sense of what's going on.
Right.
We're kind of running out of time here, but real quick, you mentioned some changes in where the trade flows are going in terms of the ports. Which are the ports that are up? Which are the ports that are down?
Sure. You can show the last slide, although it's not critical. There you go. That's the last slide. So for decades, the Port of Los Angeles was the top port in the country.
Right.
For decades. And then came the trade war with China. And so Port Laredo started moving up. Laredo is a city of, I don't know, $400,000 or $500,000, 4 or 5,000 people on the border with Texas. Right. I was just there last week. And it became the number one trade partner.
Wow.
Trade port became the number one port, right?
Inland port.
Inland port, but bigger than Port of Los Angeles, bigger than anybody. Now what you see, again, with all that gold comes in where if you thought about it for a second, it might make sense where that gold comes in. It all comes in at JFK. It comes into New York, the financial district. So that gold is coming into New York because there's skittish investors, right?
That gold is coming from India,
Switzerland. And again, that's why the 39% tariffs. And so now JFK moves into the top spot among all ports, bigger than the Port of Los Angeles, bigger than Laredo. And then up comes O'Hare with those pharmaceuticals and also a fair amount from China still. But so those are the top 2 ports in the country on a year-to-date basis still. In the month of July, the latest data available, Laredo did move into the #1 spot. So we'll see how it plays out. But as you remember, at the beginning of the discussion, I said China's deficit was 5 times larger than any other country when Trump first started the trade war. So with all that trade now moving through Laredo and coming from Mexico, Mexico is not that far behind in the size of its deficit than China.
Wow.
It's about the deficit with China is now about 50% larger
So
than
they've
Mexico.
changed the deficit with China to the deficit with Mexico.
And a number of other countries have increased more than 100%.
Wow. Incredible.
The deficit is going to set a record this year, but so will total trade, so will total exports, so will total import.
I mean, all that talk of the billions and trillions of dollars now of manufacturing coming back to the U.S. doesn't happen overnight, right? I mean,
Does not happen
I
overnight.
think you'll see that, but I mean, you can't. It's like turning an aircraft carrier.
And we've got a great big economy with people who can afford. I mean, there was a time when if you had a cell phone, it was kind of a big deal. Almost everybody in this country has a cell phone now. Almost everybody has air conditioning now. Almost everybody has a roof over their head. Almost everybody has more pairs of shoes than probably you or I had as kids, right?
Right.
Most everybody has access to the internet at home and on their phone, of course.
Oh, listen,
We have a lot. We spend a lot.
and that's also what gives Trump the leverage, right? Because at the end of the day, this is the world's largest economy. I mean, China's trying to sort of nip at our heels and catch up, but this is still the U.S. of A. The dollar still reigns supreme,
Right.
and it means something. And everybody wants to sell their stuff here,
Right.
Because we are a wealthy country.
And that's why so many countries initially bowed quickly.
Correct.
So
Excellent. Ken, if people want to reach out to you, find out where you are, where was your website? Where can they go? How can they?
a lot of this trade data that I'm talking about is at ustradenumbers.com, ustradenumbers.com. And probably the easiest way to find me is Ken Roberts. There's a whole bunch of Ken Roberts on LinkedIn, a whole bunch of us. But
Well, look up Ken Roberts World City, and you'll
Ken Roberts, World City, Miami.
and your article in Forbes comes out 5 times a month. Yeah.
It's supposed to come out 5 times a month. Sometimes I'm a little bit better, sometimes I'm not as good. I'll be honest with you. I write a lot more when Trump is president than when Biden was president. Biden wasn't doing much with trade. Now, here's what I'll say. Biden didn't get rid of those tariffs from China. Biden didn't change much.
No, I know. He
didn't change much.
The guy who did that revenue stream was addictive, right?
Yeah.
So not a whole lot changed.
Yep.
Thank you, Ken, for being with us.
My
Appreciate it.
pleasure. A lot of fun. Yeah.
Take care. A lot of fun.
Good. Great.
So hopefully you enjoyed this and get you back someday.
Yeah, I'd love to do it again. It's always a lot going on here.
Fascinating subject.
Yeah.
Thank you so much. Ken Roberts from World City here on Dinero y Mas. We'll be right back.